Britain's economy is flatlining, growth has stalled, and wages are stagnating. And that's a big problem, because the government needs a growing economy to pay for its ever-rising public services bill. For years, it has plugged the gap with borrowing, but that's not sustainable forever, and the bond markets know it. The cost of borrowing for the British government is already increasing. That makes the situation worse, because higher interest payments mean there's even less money left for schools, hospitals, and infrastructure. But it doesn't have to be like this. There is a way that Britain can restore growth, and it can do so at almost zero cost to the taxpayer. And in this video, we will set out exactly how by asking 3 questions. First, why has Britain's growth engine stalled? And why is the country that started the first industrial revolution completely missing out on the wave of new innovations? Ironically, a suite that includes numerous productivity-enhancing products. Second, how can Britain change this? We will set out how Britain can attract the best people, attract the best ideas, and boost the level of research and development investment significantly, while getting the private sector to foot the bill. And finally, we will look at the risks of this strategy, because there will be challenges and difficult decisions. And we will explain how sitting on the sidelines is actually the one risk that Britain simply can't afford to take. But to begin, let's look at why Britain's growth engine has stalled. For most of the 20th century, Britain's economy grew steadily, powered by industrial innovation, expanding trade, and a thriving services sector. Even through recessions, the long-term trend was upwards. But something changed after the global financial crisis. Growth flatlined. Before the crisis, the economy grew by about 2% a year. That was in line with what people had come to expect. It wasn't spectacular, but it was steady and predictable. Since then, there has been very little growth. In the 17 years since 2008, Britain's GDP has grown by barely 5% in total. That's only about 0.3% a year. So what's behind this sudden slowdown? Well, there are a few theories why the 2008 crash hit Britain harder than most countries. Firstly, London's dominance in global finance made the country especially vulnerable. Finance had previously been an engine of growth, but post-crisis, it was more of a liability, with many banks having to be recapitalised. Austerity was another issue. In 2010, the government slashed spending to balance the books, an essential step, but one that choked off investment and spending. And then Brexit made everything more complicated for importers and exporters, and a lot of economic activity was simply put on hold. But the real problem by far is the dramatic slowdown in Britain's productivity growth. Before 2008, productivity, that is how much each worker produces, was growing at about 2% a year. But since then, it's slowed to around 0.5%. And that's important because productivity growth is the main driver of rising living standards. When workers can produce more value in the same amount of time, wages tend to rise, businesses become more profitable, governments collect more tax revenue without raising rates, and society can afford better public services, like healthcare, education, and infrastructure, without going into debt. In contrast, when productivity stalls, so does everything else. Wages flatline, growth slows. The cost of living rises faster than incomes. It becomes harder to fund the NHS, build new homes, or invest in green energy, because the economic pie isn't getting any bigger. So what's behind Britain's productivity slowdown? Well, Britain simply hasn't invested enough. Investment in technology, infrastructure, and skills has lagged behind other advanced economies. Workers aren't being trained for high-value jobs. And Britain spends barely half as much on R&D as the US, and only a third of what South Korea invests. As a result, productivity has stalled, growth has stalled, public services are declining, and debt is increasing. The logic is straightforward. Invest less, and productivity falls. But what doesn't make sense is, why is it that Britain is facing stagnant productivity just as technology is racing ahead with advances that are designed to boost it? What is now being called the fourth industrial revolution is well underway. AI, biotech, quantum computing, robotics, big data are already reshaping economies. The US, led by Silicon Valley, dominates. China is pushing hard. Israel and Taiwan have carved out world-class niches. These are the very technologies that are going to revolutionize productivity. Artificial intelligence can automate complex tasks in seconds. Robotics can transform manufacturing efficiency. Quantum computing promises breakthroughs in everything from logistics to drug discovery. Big data is enabling businesses to optimize processes, predict demand, and innovate faster than ever before. In theory, this should be a golden age for productivity, an era where economies can produce more value with fewer inputs at unprecedented speed. And yet, Britain is missing out. While other countries harness these technologies to accelerate growth, how can that possibly be? How can the country that ignited the first industrial revolution be stuck on the sidelines of the fourth? There are political battles, economic constraints, and, above all, the enormous upfront cost of investing in cutting-edge innovation. With public finances being so tight, how can the British government afford to invest? The thing is, it doesn't have to. There is a way to ramp up private R&D, attract the best people and ideas, and put Britain on the front lines of the fourth industrial revolution, without costing taxpayers a penny. And to see how, we can look at Israel and the Yozma Program. Back in 1993, Israel was still a relatively poor country on the fringes of Europe, constantly at war with its neighbours and having recently recovered from a bad dose of hyperinflation. Nevertheless, Israel, with all of these problems, was able to attract investors and founders to start up a range of companies with some of the best ideas in technology and become a hub for innovation. The reason was the Yozma Program, an unusually clever piece of government policy that transformed the economy. It worked as follows. The government set up 10 independent venture capital funds, each run by experienced private investors, often partnered with leading firms from Silicon Valley, Europe, and Asia. These funds scouted for high-growth potential startups in fields where Israel already had an edge, areas like software, semiconductors, cybersecurity, defense tech, and medical devices. The government didn't pick the ideas. They just put up 40%, and the private investor 60%. Sharing the risk with private investors, but giving them the right to buy out the government's stake later. The thinking was simple. Private investors had skin in the game. They were putting up 60% of the money, so they were incentivized to back companies they believed could actually succeed. By doing so, the government absorbed much of the early startup risk, while investors kept most of the upside. A subsidy of sorts, yes. But it made the scheme enormously attractive to venture capitalists. And when the companies succeeded, the investors were eager to exercise their buyout option, meaning the government got its money back, often with a modest return. That meant, for taxpayers, the investment was essentially cost-free. The impact was dramatic. Suddenly, the best ideas and world-class talent started flowing into Israel. Venture capital exploded. Startups grew, and global tech giants began acquiring Israeli companies or opening R&D hubs in Tel Aviv. And today, Israel's GDP per capita is higher than Britain's, France, Germany, and many other countries. So why doesn't every country just copy Israel? Well, that's because most simply can't. They don't have the capital markets, they don't have the legal frameworks, they don't have the talent, the world-class universities, the stability, or the business-friendly reputation needed to pull it off. But Britain could. Britain has some of the best universities in the world. The UK is home to 4 universities ranked within the world's top 10. It is still a global hub for finance with deep, world-leading capital markets. More specifically, Britain holds unique data sets that are a potential goldmine for AI. The NHS has decades of health records covering millions, driving breakthroughs in drug discovery and personalised medicine. Its financial sector adds another stockpile of high-quality data powering fintech, payments, and fraud detection. And Britain is the 7th largest economy in the world, which means startups don't have to look abroad to validate their ideas. They can test, refine, and scale new technologies right here. In a market large enough to prove commercial viability, but compact enough to adapt quickly. More broadly, Britain has one of the most trusted legal systems in the world and, despite recent upheavals, still offers political stability, excellent schools, and a lifestyle that appeals to global talent. Put these all together, and Britain has everything it needs to become a global hub for AI and robotics. Not at massive public cost, but by unlocking private investment, leveraging unique national assets, and using the power of smart regulation. So what's the problem? Why is Britain still sitting on the sidelines? The reason is light touch regulation. For AI and robotics to thrive, companies need not only the chance to profit, but also the freedom to develop and test new technologies. That means a lighter regulatory touch, and for many people, that idea is deeply unsettling. Rolling out such a program will meet resistance, and understandably so. AI, robotics, and autonomous systems raise genuine concerns about job displacement, about military misuse, and even to the kind of existential threats that sound like science fiction. But the thing is, sitting on the sidelines won't protect Britain. Whether Britain chooses to be a leader in developing these new technologies or not, we can be sure that both our friends and enemies will proceed. Today, Russia, China, North Korea, Iran, the United States, and many others are already pushing this technology to the absolute limit. It is like a modern-day arms race. If Britain stands on the sidelines, then the country risks being left behind. Economically, it would fall behind countries that are driving AI, robotics, quantum computing, and biotech, technologies that are set to transform global productivity and wealth creation. Militarily, it would be dangerously dependent on others. Imagine a future where adversaries deploy autonomous weapons, AI-driven cyber attacks, or quantum-encrypted communications that Britain simply can't counter. And in the worst-case scenario, Britain could find itself completely unprepared in a confrontation with artificial superintelligence. In short, there is no good outcome from sitting on the sidelines. That's why Britain must develop these technologies. It is the only way it can shape the rules, secure the economic rewards, and manage the enormous risks that lie ahead. A link for the next video should be on your screens now. Just click to keep watching. I hope you enjoyed this video. If you did, then please like, subscribe, and follow. Thanks for watching.